Okay, so today was a beautiful, beautiful, beautiful example of when the market is ranging and just waiting on confirmation, having directional confirmation, just all of that stuff. And it was fascinating to watch play out. I actually got to sit in silence today and watch it play out. So I wanted to show this to you all. So we're going to start with a top-down analysis. I do have the bar replay set. These panes, it's all in queue, and I have the 4 hour on the left, in the middle, the 1 hour on the right, the 15 minute. So let's start here. First, we're going to start with this blue box. Here is a 4 hour fair value gap. It's a bearish fair value gap. All right. We love that. We love to see that. Amen. 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 I definitely want to point that out. Now, because this 4 hour fair value gap was already traded, or I guess we'll say, yeah, it traded through it last night. And then not only that, we also had where it broke this previous low. So we also had a market structure shift as well. So any sort of magnet, whether it's a fair value gap, order block, breaker block, whatever magnet you looking at and you recognize, if a magnet was formed when price also shifted structure, we pay attention to that. So again, this was a breaker structure because it was a continuation, right? We already had the lower highs and lower lows. So it was a breaker structure, but it was still a market structure shift. All right, bet. I want to pay attention to this. Now, because this was such a, and especially on the 4 hour, right? This was a very large displacement candle, just meaning that it created an inefficiency, a bearish cheat code, whichever term it is you want to use. All right. Y'all know I use my own language and then try to give the synonyms when I say bearish cheat code for inefficiency, fair value gap, et cetera, et cetera. But since it made this, I'm very high probable that price was gonna fill that sucker. Okay. Especially because after it created this fair value gap, it then consolidated in that last 4 hour block. We consolidated. If we look here on the hourly chart, right? You see it just stayed right there. Expectations was that it would consolidate during the Asian session because that's that's how the market moves, right? Now, what I mean by that is we'll that's not good. Let's do this. We'll consolidate at the top and then drop. And then what do? We consolidate at the bottom and then rise. Consolidate at the top, drop over and over and over, right? We go from if we're looking at this because we're coming from from highs, we distribution phase, then we drop, then we accumulate, then we rise. Over and over and over. That's the way that the market moves, all right? So since we had this drop, which again was a structural break as well, break of structure in this, it's gonna have to accumulate. Well, it was gonna accumulate, or we'll just say consolidate. But it was an accumulation, but it was gonna have to consolidate. Consolidating at lows is accumulation at the during the Asian session, and then give us a pop up. Again, the structure is already is bearish because we have lower highs and lower lows were created. Lower highs, lower lows. All right. So what should I expect to see? What would I be looking for in here? I would be looking for a lower high. And I would expect that that would play out during the during the London session, possibly like pre-market. On top of that, CPI data dropped today as well, or it was going to drop pre-market as well. So just expectations was set that, okay, we're gonna reach one of those. Now, we also have inside of this 4 hour fair value gap, when I come to the hourly, we also had an hourly fair value gap created. And I really want to, I'm about to do the back button on all of this because, yeah, I want my original. There we go. I want the original back. We also had this 1 hour fair value gap, also bearish, was created. So our higher time frames, the 1 hour and the 4 hour, love that. We got bearish magnets. Price is very much so going to be attracted to It was either going to be, I'll just say the 1 hour fair value gap, right? Because we already, at the close of the Asian session, we already closed inside of the 4 hour fair value gap, right? So now we have this 1 hour and one part. We still hunting it, still these magnets, still lots of orders, liquidity sitting up in here, and boom, bam, pow. So it was going to be at one of these places, the lower high, I would look for a lower high reject here, lower high reject here, or a lower high reject here. But I want to see the reject somewhere up in there. So then we have here on the 15 minutes. So now we're going to play this out on the 15-minute time frame. And this is at 4:45. So I'm going to let it rock out for a little bit here. It might be too slow. Let's do the 1x and just play out here. So again, it's like the 5:30. Okay, boom. Now we have this the 7:30 candle, which is right when CPI data dropped, which don't even get me started on that. This is where it got interesting. This is where it got interesting because it's okay that this breached the entire bullish fair value gap or bearish fair value gap. My apologies. So now, what is also important on top of here too, though, let me add something else, because now this is where I'm really trying to pay attention, is look at this bullish displacement candle as it traded through this bearish fair value gap. Hmm. Pay attention to that. And yes, I just draw boxes on top of boxes on top of boxes, child. I do what works for me so that I can see. But the combination isn't contradictory of what the 4 hour and the 1 hour is saying and what the 15 minute just did. It's not contradictory, but it is very informational. So the 1 hour bearish fair value gap is the parent the parent narrative. So until price fully reclaims it and shows a confirmed higher time frame structural shift, so either a change of character or a continuation or reversal, right? The buy is still bearish. It's not trend bullish. So the 15-minute fair value gap that was made right here, it doesn't mean we're bullish now. It means that price needed some liquidity and it needed to mitigate this bearish 1 hour fair value gap before continuing, the higher time frame objective. So at this point, I'm thinking, okay, well, this is more than likely something that I'm paying attention to for delivery, not necessarily the direction of it. Um, So at this point, what I would be asking, I'm looking at my notes, what I would be asking myself is, did price close above the 1 hour bearish fair value gap? That's what's important, is that 1 hour fair value gap, because that's what we're trading inside of now. It a 5 minute close, a 1 minute close, because I'm pretty sure if I went to the 1 minute, there was a 1 minute close above there, probably, or like 30 second, 15 second, whatever. That's not enough. Since I'm looking at an hourly magnet, I need hourly confirmation. If we got an hourly close outside of here, close, not wick, a close. Because a close is confirmation. A wick is just liquidity hunt, like a liquidity hunt. But an hourly close out of here, yay. Hmm. The buyers just took over. The sellers weren't able to defend the 4 hour magnet or the 1 hour magnet. That would get me a little bit there, okay? Um, but just remember, also something I want to say, trading through it does not mean that price like actually reclaimed it. So at this point, for this to flip bullish, again, we would need an hourly close above this bearish fair value gap and then uh a structural shift, okay? Without that, without that, all of the bullish signals are counter trend. So it would be scalp only, which is, if you quick enough, cool, but it definitely would be scalp only. Now, if this was going to stay bearish, which at this point is the most likely scenario, what I would want to see is the 15-minute fair value gap right in here, right? I would want to see this 15-minute fair value gap get mitigated. Now, To be mitigated, it doesn't necessarily mean that it has to hit this 50% mark. That makes it beautiful, right? But the sucker could also, this could be like anywhere in here. It could come all the way down to the bottom of it and go and whatever well, I shouldn't have done that, but it could come all the way down to the bottom. But we just want to see that the market attempted to balance out these unfair bearish transactions because you got a 4 hour, 1 hour on top of a 4 hour, child. All right. Okay. So yeah, so we would want to see that the 15-minute fair value gap was mitigated. We have a close inside of there, and we would still want to see a structural shift. So a change of character down. We want to see price because right here, what did it do? It made higher highs and higher lows for this 15-minute. Like if we go to the 5-minute and the 1 minute and on down, right? Made the higher highs and higher lows. So I would need to see price do a bearish change of character and lose a previous. Please don't mess this up if I switch in here. Okay, bet. And lose a previous low, higher low, which is really all the way down here, if we being honest. Not even honest, if we following the technicals. This that previous low here on the 5-minute. Okay, price would have had to have lost this. And then the higher time frame is aligned with the entry model. Okay, bet. But let's keep playing it out. And I'm actually going to play it out on the 5-minute now. Let me change this a different color. I feel like that yellow is hard to see. Oh, what did I just do? Where'd all my charts go? Hmm, okay. So what's really important right here is that we, at this point, because a lot of people would enter right here. They'd be like, okay, well, and then the hourly candle's almost up too. Yeah, you just got 5 minutes left in the hourly candle, and it's like, okay, well, we're about to close below there. This rejected. Let's go ahead and get in. No, baby. No, baby, not yet. Not yet, not yet, not yet, not yet, not yet. Not yet. We need to see a structural shift because the bulls did come up in here and take this over. We need to see a close back inside of the 15-minute fair value gap, a bearish close back inside, obviously, right? And then we want to see a market structure shift. Let's say that again. Um, let's see, is this what I wanted to look at right here? Yeah. So now we'll look at this next 5-minute candle. And this was it, right? So we see that that hourly candle, the 7 a.m. Central, 8 a.m. Eastern, it closed below there. There's still hope for the sellers. At this point, there is still hope for the sellers. There's also still a case for the bulls as well. So we have to wait, which is the frustrating part. We have to wait. Everything is if then and contextual. So all right. So you see this push up, this dude wasn't telling you to get in because if we broke these highs, this would mark it as a higher low. But then I would need to see it make a new high, pull back, make another higher low. And on that second higher low, then we would be like, all right, the bulls are in control. Other than that, if it sweeps this, child, our first target is the 50% mark of this bearish 1 hour fair value gap. All right. Because it's just the most high probable that, as humans, we tend to do things at least halfway. Is this what I wanted to say? Yeah. So the 1 hour is still bearish at this point. It's still bearish, but the internal time frame, so like the 15 and lower, is is internally, right? It's bullish signals, but conditional only. It's all like it would have to play out. We'd have to go ahead and break these highs, pull back, give another higher low, and then it's no longer a bullish signal. Now we're looking for our bullish entry, right? Now, on top of that too, honestly, Really, and I want to make sure I say this because remember what I said with this 7 a.m. candle, we wanted to see an hourly close, bullish close outside of that fair value gap. Baby, it's still the same thing for this one right here because that didn't close above it. I'd still want to see this 8 a.m. candle, 9 a.m. Central Eastern. I would still want to see that close outside of here, the fair value gap, and then give me the market structure shift with the higher low, higher high, and then go ahead and get in. Okay. I want to see a higher low form above the fair value gap. So did this just increase my waiting time for an hour? It sure did. It sure did. It absolutely did. I need to see the hourly candle close outside of there. That's that's how I know. All right. And then the higher low would be the confirmation for me. But until that happens, again, the 5 and 15 minute, like the bullishness of it is still counter trend delivery. So it's tradable as scalps, not as a bias flip, not yet. Now, in order for this to continue to be bearish, and then I have my bearish entry, then there was no acceptance above the 1 hour fair value gap. Okay, period. We got that rejection. Then I want to see on the lower time frame, the 5 and 15 minute, a change of character after price tapped into the fair value gap. It's going to have to close inside of this fair value gap, stall out or like give a fake push up or something like that, right? Just to tell me that, to show me that buyers are done delivering and the sellers are stepping back in. We can call it like a permission slip. I need to see that. And then the highest probable or highest quality entry, I guess I would say, would come in from I'd want it to close inside of here, then pull back up. I know, right? It's like, dang, girl, yep. First thing, you got to close inside of here. Wherever you closing here, then I want to see you push back up and make a lower high, break the previous low from like when it first closed in here. And when we break that low, now that's my entry. Stop loss would be immediately the top of the fair value gap. So it would make it like a two to, I mean, like a 4 to 1, right? Because at that point, our first target would be the bottom of the fair value, hourly fair value gap. But if it's rejecting that, extraordinarily probable that it's then gonna trade down through the 4 hour fair value gap. So we risking just a little bit up here for all of this down there. Love it. High probable setup there. All right. Now it doesn't necessarily have to hit the 50% mark of that fair value gap, but it is optimal. That's the word that I wanted to use. It is optimal. All right. And then a note that I wrote down here is a good rule of thumb, and everybody should write this down and put it on your at your workstation is a rule is I do not short just because price is in a bearish fair value gap. I short when lower time frame structure fails inside of higher time frame supply. That's it. The lower time frame needs to make a bearish move inside of a bearish higher time frame magnet. That's when I'll enter. That's it. That's all. Okay. Keep going. So then we see price came on up here. Hit. Oh, that went fast. Okay, well, we can still talk it out from here. Now we have that closed. We see that reject. They hunted liquidity up here. And so at this point, this is looking like buy side liquidity sweep. They came in all these buy orders that people were placing to push price up. They, as in the institutions, came in and swept those buy orders out the way, threw them in the trash, and we got this reject down. Now we have a close inside, a 5 minute close inside of this the fair value gap. We still don't want to enter. Now I want to pause right here and then backtrack a little bit. Could you have taken this entry here when we saw that it rejected, when we saw this large upper wick, or even if you entered on this second candle here, or even if you entered as soon as it came inside of the hourly fair value gap? Yeah. However, immediately you need to be watching these mitigation levels from the hourly and this 15 minutes. So this range in here, since it like stacks on top of each other, right? We would be looking at this as our first target. If anything, if you entered here, here, or here, this should just be the objective as a scout, and I would size accordingly, right? But I mean, shoot, that's dropping from 324 down to 183 on NQ. You'd be just beautiful. You'd be just fine with that move, and you could go touch grass and have a good day. If you're the type of person who's okay with making your money, even if that means you didn't catch the entire trade. Right. Now, remember when I said a closing. So now let's go back because for the quote unquote perfect to catch the move of the day thing, a close inside of here was the first step. Now I want to see price push back up and make a lower high. Again, we could enter here, but it'd be even better if we just waited for the break of structure, a market structure shift, and we entered here. Because why? Our stop would immediately be if there was a 5-minute close above the previous low. 5-minute close below there. Okay. So and again, here on the hourly, it's like, ooh, we're not closing above there. So it seemingly looks like, right? But on the 5-minute time frame, you can see this is the 840 candle. So there's still 20 minutes left in this hourly candle. Keep that in mind because that was also one of the main conditions. If this was going to be flip bullish for right now on the lower time frames, it was going to close outside of here. If it was going to remain bearish, it was going to close inside of here on the hourly. Now let me slow this down because why that went so fast. And so we see that price came, and this is the 850 candle. Tap that mitigation level, chow. And what do we have? An impulsive candle that is now about to close outside of here, and it got the hourly outside of there. I mean, of course, right? But all right, boom. And then can't be silly to the fact that this 4-hour candle, which is about to close in the next 5 minutes as well, because this candle opened at 5, closes at 9 Central or 6 and 10 Eastern, right? But this about to close up at the 4-hour bearish fair value gap and the 1-hour bearish fair value gap. Yeah, look like power is exchanging hands right in front of us. What looks like chop to some people is actually very clear for the patient. So boom, we got an hourly close outside of there, a 4-hour close outside of there. Ciao. At this point, we looking for a higher low. We are looking for a higher low. Whether it happened here, or it came back to the mitigation level. Which if it came back to this mitigation level, that would simply just be a what? For my chart pattern babies, that would be a double bottom. Liquidity created at an important level. So this is probably the highest probable place that we would see that drop. Let's see. Again, if you took this as a scout because it closed back inside the hourly fair value gap, to the mitigation level, because liquidity's already there. We already had a low there. I'm not negating trading this from 245 down to 168. We know what's 245 minus 168. That's 77 points. Not negating that if you're quick enough to catch it, right? And I say that because I'm not. I can talk you through it, but I don't react quick enough. That's what my trading journal says, and I don't never really did try to work on that because yeah. But okay. But let's see. Came down here. Now these lower wicks told us a lot. And let me delete this 15-minute fair value gap now. But let's put that back real quick because look at that mitigation level. Look at that. Beautiful touches. Beautiful touches right on it. But that told us a lot. And then it did what? It created a bullish fair value gap coming up out of there. Now you made a bullish fair value gap coming up out of these bearish higher time frame magnets. If you enter down here, ain't no thing but a chicken wing. Just understand that we still have not gotten a lower high. We want to enter, I mean, on the higher low. We want for bullish, we want to enter with a higher low, whether it happens at this 15, at the top of this bullish fair value gap, the mitigation, the bottom, maybe even came back and hunted this liquidity from the hourly again. We'd have to see. We have to wait. Price came in and it made a new high. Now keep in mind, this also did because this was previous high right here. Oh my God. Now we tap back into the fair value gap like we talked about, created a bullish fair value gap coming out of it on top of like we closed above those higher time frame magnets too on the 4 hour and 1 hour. Love that. We also finally had that market structure shift, closed above these previous highs. So again, what are we looking for? For price to make a freaking lower high. I mean, higher low. My apologies, y'all. Higher low. I'm still popped up on that Z pack and Dayquil and NyQuil. All right, so we see price pulling back. We can speed this up now. Where it sits here and it consolidates, so as you say, and this is where price is in real time. We still, if we're looking here on the 5 minute, I mean, if we drop down to the 1 minute, but I haven't analyzed any of this on the 1 minute, so I don't really need to. What do we have? We have equal highs and lower lows. Ciao. Plenty of scalps to the upside presented and downside, I guess, or a few scalps and whatnot presented itself, but there's been no directional trend until we get us a higher low. Get it together, Alex. Till we get us a higher low, whether that happens here, again, here, or maybe even equal low here, right? Mm, This is no man's land. Now, the fact that it came up here because now what did we say at the very beginning of this recording? Price do what? Price consolidates at lows, which we know is the accumulation. It uptrends. Then it consolidates at highs, which we know is the distribution phase. And then it downtrends. Well, accumulation, uptrend, distribution. What should come next is the downtrend. And this downtrend is going to be very, very, very important. Now, if we close back inside of this hourly fair value gap, we get an hourly close back inside of this hourly fair value gap. I'm swinging puts. We come down and we hold the top, we hold as support. And honestly, at this point, since this one was already, this fair value gap was, oh, it hasn't been respected or mitigated, I should say. Price hasn't come back, so I would expect to see a retracement to this 274 level. And then it's like if you just really want it, but since this one has never been traded into, it's just all I'm going to pay attention to. And this was created when price broke structure or price broke structure off of that. I know some people might come in here and see this. Yes, that is also a fair value gap as well. None created up here, right? Very important to pay attention to. But losing this mini one would take us to the one that was actually created on the one that helped price break structure. These highs, which I really want to put my highs. We're going to put the high here. I'm going to go ahead and move that level there too. Trade off that tonight. And so we have that. So I wanted to just show this setup. If y'all have any questions, y'all can write them in the comments. If you have my number, message me, of course. But I just thought this was a beautiful, 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 beautiful just play out, I guess, of all type of trading personalities could step up into this. Now, a high probable short entry. Never mind, that's not high probable. I was gonna say because your stop could be up here at the a little bit above these highs, but I don't like that ratio. Not that I would publicly tell y'all, but you know, if we don't break these highs in here. But this also could just be price taking a little break before it goes ahead and pushes up, right? But for me to enter for a bullish move, give me this, a stop somewhere up in there, right? Give me that. For a bearish move, it had to do like this. It had to close inside the hourly fair value gap and then give me a lower high, break the previous lows, and then I'd enter. And I hope that this was informational and this was helpful for y'all. Let me know in the comments or text me and whatnot. And y'all stay safe. Drink some garlic.